Our next fireside chat is going to be powering a more connected world, future opportunities. And it's going to be a fireside chat between Liz Fleming, a principal at Adara Ventures, and a special guest, Oscar Miel from Rakuten Capital. Oscar is head of FinTech and mobility investing at Rakuten Capital, and he's been involved in many big transactions like Cabify, Lyft, and Careem. Ladies and gentlemen, Liz Fleming and Oscar Miel.
Hi guys, good to see you again. I missed you this morning, but I'm sure you were well looked after. I was looking after everybody across the way in the deep tech track. Thanks for making it in. I know it's just after lunch, and this is a super interesting conversation, so I hope you're all well fed and re-strengthened, full of force again to go for the rest of the evening, because it's a very exciting program here for you. And I'm thrilled to be here with Oscar Miel. Oscar, thank you so much for making it back to South Summit. He's been a good supporter of South Summit in the past and a great supporter of the Spanish tech ecosystem also. So we're delighted to have him here. We're going to dive into a little bit of detail about what Oscar's doing, how Rakuten are supporting entrepreneurs worldwide, and how they've built out Rakuten Capital. So stay with us for the next 20 minutes because it's going to be pretty exciting, and I don't think you want to miss any of the detail that we're getting involved in. Oscar, great to have you back. Rakuten Capital is just going from strength to strength. It's really built a powerful brand in the global VC industry. And I guess to kick us off here, I'd love if you would take us back to the beginning, essentially, and maybe tell us a little bit of the backstory about Rakuten. I mean, it's a very familiar brand as a pioneering Japanese tech company, but maybe you'll give us a little bit more of the background of the company and its origins.
Sure. So, for those of you who might not be familiar, effectively Rakuten began as an e-commerce marketplace. So we never owned any inventory. Now these models are obviously very popular, but about 20 years ago, the company established effectively a website where merchants could sell their products and connecting them to customers. Obviously, this grew very quickly, and on the back of the success in e-commerce, we started adding financial services, digital media, communications, and so forth, all of which was effectively united with our membership scheme. So the so-called Rakuten Super Points, which was sort of the secret sauce behind the success, whereby whichever site you shopped on, you could effectively earn some points that you could spend on something else. So you could be buying securities on Rakuten Securities and using those points earned on your dating website, for instance, right? Wow. Across all properties. And obviously that was followed by an international expansion, sometimes by effectively creating some marketplaces or companies from scratch in parts of Europe or Asia, or acquiring some others, such as Ebates in the US, which is a coupon company, or a company called Slice, which effectively skims your mailbox and provides you a very good picture of your expenditure, while at the same time selling big data to marketing companies with a very highly predictive model.
Cool. Awesome. Give me 1 minute there. Cheers. Thanks,
Well
Marcus.
said.
Sorry about that. So it's always been a super innovative company, constantly looking for new ways to reinvent itself and serve its customers better, I guess. So how did that then eventually formalize into Rakuten Capital? What were you thinking about? When was that formed?
Sure. So, as many of you entrepreneurs and investors here know, I mean, the moment you start accumulating capital, there's two ways in which you can grow. It's either organically or through acquisition, as well as by making investments. So I think we had the privilege of having good cash flow, like many tech companies. Certain strategic and I guess more speculative investments were made over time, particularly pursuing assets with high growth and obviously things attractive to consumers. For instance, we were an early investor in Pinterest.
Of
to name a few. So over time, what the company realized is that we had, I guess, these like pools or pockets of investments. In parallel, I guess two funds were launched, the so-called Rakuten Ventures, which focuses on more early stage investments, and particularly across Asia. I established the FinTech fund, and also, well, in parallel, as we started getting into the mobility or ride-sharing space, effectively that turned into our mobility effort, specifically with very large stakes in Lyft, obviously Cabify here in Spain and across Latin America, and Careem in the Middle East.
Excellent.
And then, about a year ago, when the organization was, I guess, like started focusing on four key areas, which were like e-commerce, financial services, digital media, and investments, that pool got rebranded as Rakuten Capital.
Okay, excellent. So there's a whole group of investment activity there specializing in different types of verticals, no? I'd like to maybe dive into a little bit more detail on the two verticals that you've specifically set up and are directly involved in. How did you land on the FinTech vehicle and the mobility vehicle? Was it a response to the opportunities you were seeing? Was it part of the strategy that was being built about how, Rakuten could support these types of companies? How did you land on those two verticals?
Sure. So maybe starting off with FinTech, I think one of the things that folks might not be necessarily aware of is that actually 50% of our operating profit comes from financial services.
Right.
So in Japan, we have the largest card issuer in the country with about like 13 million users. There is an online bank. There's like the third largest online broker, a life insurance company, insurance brokerage, a payment system called Rakuten, which is actually like very similar to Square, except it's like 8 times bigger, and that was a copycat.
Wow.
So all of these companies were basically established from scratch, or sometimes we actually bought a company that we completely restructured and turned around, and then made into a very successful story. So there was financial services already. Some of these companies are fairly mature, and there was a thought of, okay, we gotta bring in new ideas, new companies. FinTech is especially strong in the US, as well as in Europe, with areas of focus in California, New York, London, Germany, increasingly Madrid, as a matter of fact. And when we discussed, or effectively what I was brought in to do, given that my background was in financial services, both, I guess, as a former banker, and then operationally and strategically with startups and running a mid-sized financial organization, was that if we were to basically do a traditional corporate fund, it basically wouldn't work. So corporations are oftentimes known for being extremely slow, and then actually lacking in support for the firms when those companies need another round of capital, or not being necessarily present, right? So it's a bit of a revolving door. So the thought here was, no, we gotta do things exactly like any professional venture firm would.
Cool.
And we actually had two advantages, right? Because on the one hand, there was already tremendous flow. You folks wouldn't even imagine, every single day, your mailbox basically gets cluttered with emails, a lot of inbound opportunities, together with the network, and even events like this. So flow we weren't lacking in. What I did do is bring in the professionals, and then build a team of folks who knew what.
So it operates totally independently, let's say, to the corporate mothership that is Rakuten. Let's say it's an independent firm and operating like any other VC firm in the world, you're saying?
I mean, obviously, you do have an investment committee, right? But we're not, we're investing thematically, but we're not investing in terms of finding synergies.
Cool.
I think the added value of what we bring is that effectively we're trying to then connect the companies that we invest in with our own subsidiaries or firms or partner firms, and that could obviously bring in more customers, more revenues for some of the startups, and by default their valuation goes up as they become more valuable.
Excellent. So, I mean, you've got a massive market reach, right? You can help these companies enter a lot of different markets, I guess, and reach hundreds of millions of consumers, no doubt. So I guess that's a huge competitive advantage, talking to fintech entrepreneurs or entrepreneurs in the area of mobility when, they're talking to maybe other firms as well. I guess you guys have a huge amount of expertise that you can bring in.
Well, and then we also connect the entrepreneurs, right? So that's also like
Cool.
another thing that's very cool. I think we also have like conferences and events that take place in Tokyo. For those of you who have been to Japan, it's actually quite a fun place. So I don't think it's just like the speaking opportunities. Similar to Madrid, folks like to come there because
Sure.
the partying is quite good.
Yeah, awesome, excellent.
And by default, actually, you build more teamwork and folks get to work with one another.
Maybe that's what South Summit should be looking at for expansion. Is Japan South? Why not? Ready? Yeah, let's go for it. It's Tokyo. I'd absolutely love it. Count me in. And so, a fascinating background on the fintech side because there's a wealth of experience there. But then on the mobility side, so how did that come about? When did you guys start looking at that industry? When did you start making investments and then finally say, right, we need a whole fund and vehicle dedicated to this because we see the opportunity so large?
Sure. So, if you look at the ride-sharing industry, it is effectively a marketplace, right, of folks exchanging services, transportation, and clients coming to get it in a specific medium, which obviously has tremendous potential. And if you look at all the miles traveled in 1 year, right now, that represents about 0.4% of the overall miles traveled by the industry. And I'm talking about like ride sharing specifically. The forecast is that that's going to change to about 20 to 25% in about 5 to 6 years, right? So.
Wow.
You have a humongous opportunity, you have a marketplace, you have very dynamic entrepreneurs. So we understood the marketplace mentality. We obviously picked very carefully with the companies that we've put money in, and also the space had a lot of growth. So in our view, even though the competition obviously is very big and very strong, the view always was that if you take companies such as Lyft, Careem, or Cabify, in no market you would allow one company to be the victor. That was like always like the theory. Like we're winning the market. We're taking it like city by city, but
Yep.
No government or authority would ever allow one party to exercise that monopoly power. And in addition, we've been excelling at picking firms that, in our view, had a very strong culture of service, extremely strong ethics, as
Wow.
I guess history has proved to be on our favor, and frankly, companies that people prefer to use.
That's incredible. That's super interesting, actually, because that was one of my next questions is, were you looking for opportunities by specific geography, or was it more about the team itself and their capability to execute on that opportunity? Because Careem is in the Middle East, no? And then you've Cabify here, of course, and across Latin America, and then Lyft is dominating in the US, no? So.
Sure. So, obviously, the one thing that we wouldn't do, which, again, like no venture firm ever does, is to invest in two firms that might be competing against one another in a specific space.
Yeah.
Right. So yeah, effectively here, based on the criteria that I mentioned before, we also went for specific geographies, right? So we effectively have a foothold in different parts of the world. We do see a lot of complementarity coming out of those assets, and actually, well, partly, everybody kind of knows each other in this industry, but we certainly also bring them together. I will add to that, and this hits home more closely, that the last one that we did, which is, I guess, also in the mobility service space, but more so focusing on deliveries, is a company called Glovo, operating in Spain, now France, and Italy. So we've just led the round with Cathay Capital out of Paris.
Excellent, great to see that, and love to see how active you guys are in Spain, and I'm sure that's a lot with your championing of the ecosystem and getting in and out. Just a final point on the mobility side of things, because you have very unique visibility of kind of three of the strongest players in the industry. Are there similarities between them in terms of how they've managed to be successful in the regions they're operating in, or do they have very unique approaches in how they're maybe entering new markets or dominating a geography? What are you seeing the nuances between those three companies like Cabify and Lyft and Careem, that you work so closely together with them? Are they very different? Are they quite similar?
So what I would tell you, right, is that again, this whole space is becoming very much like the Game of Thrones, right? Like every morning you read some news about like what's happening, and it's also like so freaking incestuous, right? Like everybody is like sleeping with everybody else right now because of all the different like stakes that different players have in one another, and obviously as valuations and the space has gained more relevance, it's complicated, right? I mean, the way we look at it, it's almost as I guess the European wars in the 17th or 18th century. A lot of like diplomacy, a lot of like politics, and people who can be your friends or enemies, and that might change overnight. The guys that we've chosen are actually, well, specifically very good people, right? So whenever we go and look at a company, the first thing you look at is the team, it's the ethos, is the culture, and that percolates, right? So as I said earlier, like what does unify, or the commonality among all of these, is effectively how well they treat their employees, how well they treat their customers, and obviously that's where reputation grows.
Excellent. Yeah, no, fantastic. And I guess from you guys, it's a real long-term point of view as an investor. You know what I mean? If you're getting not just the right technology and the opportunity, but the right people and the culture that can actually make these big businesses and have a long-term competitive advantage, I guess.
And not to mention, right, that the fact that a lot of things will actually change. I mean, right now, this is basically the beginning of a revolution, especially as the OEMs, that is the car manufacturers, are looking at the space more and more closely. You will see the emergence, or everybody is now talking about electronic vehicles, autonomous driving. Some of the big firms are effectively, the Chinese are saying, for instance, right, that by 2030, all cars in China are going to be electric. I think GM also made like a similar announcement that that they're like replacing their entire like fleet or production lines with electric cars a few years from now. Not to mention the entry of technology firms. So sometimes when you actually like take some of these test rides with some of these cars, it's like fairly fascinating of what the future will bring. But it's definitely going to change the dynamics of the industry. Yeah. Not to also mention the possibilities for like financial services and like media inside of the cars.
Sure, exactly. No, because we're not going to be driving them anymore, I guess. We'll have plenty of time to be doing other things, no? It's fascinating, I guess. It's just the tip of the iceberg in terms of the opportunities to invest in future areas like that. And just to shift gear and have a look at how you guys are implementing on like a global strategy of investment. Suppose you have a really strong brand, but how are you identifying these world-class entrepreneurs in all different parts of the world, right? Because you're investing across Southeast Asia, Latin America, and the US as well, even in Europe. How do you build that network or get access to that global talent? And
sure. So I mean, initially, and yes, you gotta work with a small team, but effectively any effort is increasingly more research and big data driven. Okay. And that's effectively where we're taking the effort forward. Some of you might have heard of a hedge fund called Two Sigma out of New York. I mean, this company basically, they all do algorithmic automatic trading, basically with no traditional traders. It's all like PhDs that are identifying patterns, coding, and the machine is kind of like on autoplay. Okay, when you go into venture, it's a bit different because you gotta deal with entrepreneurs, tough personalities. Yep. It's like rearing a child. However, when it comes to identifying the companies, our effort will increasingly be data driven. As a matter of fact, we're closing on another investment in a company called Syndix, CYNDX. It's a fundraising platform that's all like big data driven, that identifies all the companies, private, public, that can be in a given sector by effectively scrolling the web and again like identifying what would be like the most ideal investor for any one company. So we're also like retooling what they are doing to also help us effectively not only do the top-down approach per sector, but also like identifying specific opportunities ahead of time. And that's going to be like a big changing factor.
And I mean, from the bottom-up side, you kind of looking at different types of growth metrics and those types of things to be able to improve your investment decision-making process, I guess.
I mean, that you do normally, right? But it still is sort of a more, I guess, like manual process where you get materials for a company, you have your own knowledge, and you make your judgment call. With what we're doing right now, a lot of that flow will be way more automatic than it used to be in the past.
Super exciting, and can't wait to see how that pans out for you guys. And just final point to touch on, I could spend hours here, there's so much you could go into, but unfortunately time is flying by. I suppose Rakuten being a huge global brand, and Rakuten Capital now is a global brand as well in the VC and the investment industry, but originally a Japanese company, let's say, but now operating all over the world. Have you found what are the nuances with operating with a firm originally out of Japan that has been so innovative, I guess, and grown really quickly in a short space of time, versus investing in entrepreneurs in Latin America or in Silicon Valley? Do you still see cultural nuances between the companies there and the cultures and how that works? And is Rakuten unique in that way out of Japan in terms of how
I think, I'm going to borrow the tagline from like some other firm, which was like, think globally and act locally, or the other way around, right? Where effectively, we continue to foster entrepreneurship, work with very small teams, and just like staying extremely close to entrepreneurs, right? So, I mean, unfortunately, I spend like 50% of my life on a plane, but you gotta be very, very close to people, and you gotta continue acting as an entrepreneur. Otherwise, everything breaks.
Okay, excellent. All about the personal relationships at the end of the day, I guess.
Yeah.
Brilliant. Oscar, I'm sorry, afraid we're out of time. Thank you so much for being here, and thank you for sharing.
Thanks, everyone.
Thanks, guys.
Thank you.